Hey everybody, it's Lisa Lathom with eXp Realty, and today I have a special guest with me. This is Shelley Hysong with Mars Bank. Shelley and I have met through the Beaver County Association of Realtors. She's on the, what do we call that one? What do we call that board, Shelley, for the vendors?
Which?
For the Beaver County Association of Realtors.
Oh, affiliate. I'm
The affiliate.
Yeah.
I think that's where we first met. And then we've been in a couple of networking groups together, Women's Business Network and Spirit Business Connections. So Shelley is more than qualified to help with all of your mortgage needs. And I'll let you talk a little bit about yourself, Shelley.
Oh, well, thank you, Lisa, and thanks for inviting me here this morning. As Lisa said, Shelley Hysong. I'm a mortgage originator with Mars Bank. We are a full service community bank. That's where my kind of heart lies with the whole community banking, with a wide variety of products and services, refinancing, purchases, construction loans, home equities. So I've been in the banking world about 30 years now. I started out as a branch manager in a branch office. Got hooked onto the whole home equity lending side and left the retail side, went to the mortgage origination side, and that's where I've been since. So I kind of, I'm a HGTV geek. Housing is where I'm at, so.
That's funny. I do not watch HGTV because it gives me anxiety. It's too much like work. So I'll go out and show houses and people will be like, you know that show? And I'm like, no, I don't watch that show. I watch a little bit of Chip and Joanne, but that's about it. That is my HGTV. And I used to watch House Hunters for fun before I was a real estate agent. Now I can't do it.
Yeah.
I can't. So I'm glad that you're keeping HGTV alive though, Shelley.
Yeah. Oh, my husband's like, not that again.
All right. So I thought that because of everything that's going on with COVID-19 and how real estate has been so drastically affected here in the state of Pennsylvania, it would be good to have Shelley come and talk about some of the changes, because there's a lot of myths going around about what's going on with lending and real estate. So I thought we would come on and kind of try to debunk some of those myths and help everyone understand what is happening in real estate. And in my personal opinion, it's still a great time to buy. We don't have a lot of inventory, especially in Beaver County, just because of what's going on with COVID. But I think once the restrictions are lifted, you will see an influx of listings. And I think the market is going to be very, very busy. That's just my personal opinion. All right. Nope. So I have some questions and I've got them written down. So I've got to read them, Shelley, because I want to make sure that I word them properly. But the first question is, are qualifications for a mortgage tightening up in the current market conditions?
Yeah, when we look at talking about qualifications, we're seeing a tightening, not so much lender tightening as so much as product type. And what I mean by that is, some of our government-backed loans, FHA, VA, USDA, when we're in this type of rate environment, the whole COVID-19, coming into play, some of those loans become a little bit riskier. So we are seeing where, we would typically see credit scores at 620, 640. They're now increasing those to around 660. Same thing with their debt to incomes. Clients, typically could go up to like 53% debt to income. And when we mean tightening of that, now they're kind of cutting off at 50%. So again, it's just because of the whole risk environment that we're in, the rate environment. They're just kind of, scaling back. And again, this is going to be a temporary thing. So, once we get through this, once the market gets back to normal, new normal, whatever that is, we'll start to see those things starting to lighten up a little bit. The other area that we saw was in investment properties. Again, product driven. When rates came down for residential mortgages, we did not see a rate reduction in investment property. Again, when we look at and evaluate the risk level, having and buying an investment property is a riskier type product than your primary residence. Therefore, with rates, they did not come down like a conventional. So, a little bit higher rates, maybe adding some points to those. So those products, are just based on risk-based price. So,
Okay.
And just with the whole environment, I just also want to kind of bring up a big myth that's been going on has been unemployment compensation. Just because of everything that's going on, everybody that's getting on unemployment compensation, there's been a lot of buzz about, lenders won't lend to you if you're on unemployment compensation, that type of stuff. Lenders have not changed how they view unemployment compensation. It has always been the same. So what we typically see on unemployment is that the lender would like you to see a history of unemployment compensation, meaning we typically see those with clients that have seasonal workers, somebody who works construction, somebody who does lawn care service, who typically gets laid off in the winter months, has unemployment compensation. Because what your lender wants to do is to make sure that, can you sustain your life living and pay your bills based on your seasonal job? So we usually like to see a 2-year history to show how you pay your bills, even though you're being laid off. What we're seeing now is somebody who works in a restaurant is coming up and they're on unemployment. And that's not an industry that typically has unemployment compensation. So, again, as a lender, we've got to go back and look at, we still have a responsibility to do what's best for our client. Is that so much putting somebody who's in a job that typically does not get unemployment and now all of a sudden is getting unemployment, and we put you in a 30-year mortgage to find out that the business you're in didn't survive, or you got laid off permanently and now you're stuck with a mortgage payment that you can't afford. So we really haven't changed unemployment compensation, but I know it's a big buzz out there, and I think it's just because we're seeing more people on unemployment right now that typically don't normally get unemployment. So
Okay. One thing that I've heard, and I don't know if this is true or not, is people that are self-employed. It's a little bit more difficult for them right now to get a mortgage.
Again, depending on how you're, as far as how you're structured. So if you are self-employed and still being able to work through this, they're going to do a 2-year average. So there might be like a lull in your income for this year. I think that could impact some clients. Some people that are self-employed are still working. So I think it just depends on your unique situation. And again, that's something that if I have a client that comes to me that is self-employed, those are conversations that we have right off the bat. Have you been working this, recently? And we're going to want to see, profit and loss statements to show that, you've been working through this. So, those are things that will come up, through your conversations, but it's not necessarily a bad thing. Just depends on how the numbers look.
Okay. All right. So then let's talk about interest rates and what the difference in interest rates mean. So maybe somebody before COVID was quoted in the 3s and now they're looking in the 4s. What does that mean for someone?
Actually, where we've seen interest rates go, we were already in a lower interest rate environment. And I think when this all hit, rates dropped very quickly. They kind of then spiked back up. Now that and we're, months into this quarantine and what this means to everybody, we have seen rates come back down. So I would suggest for those that have already closed, again, you're going to look at is 4%. Is it worth it to refinance? Where your rate's going to come down? How much are they going to come down by? It may be worth refinancing. It may not be. You'll just continue to work with your mortgage originator to make sure that you've got the best rate that's out there. We have seen rates right now are 30 years are running around 3 1/8 to 3 1/4. 15-year rates are coming down. They're around 2.5 to 2.875. So again, these are still some historically
Fantastic
that we have.
Yeah.
one thing I did get a lot of phone calls were when the, we talking about the Fed rate. Everyone said, oh, the Fed rate went to zero.
Yeah.
Going to get a mortgage at zero. Like, well, no, that's not going to happen because mortgage rates don't typically follow the Fed rate. The Fed rate is an interest rate that the lender and a financial institution gets from the Federal Reserve to borrow money from them. And it's usually an overnight rate. As far as mortgage lending goes, we follow a 10-year treasury. So if you want to see the guidelines and where the 10-year treasury is running, that'll kind of give you an indication of where mortgage rates are going to be.
Okay. And then I just have this to interject. I thought this was really interesting. People that chose to go into forbearance, people that couldn't pay their mortgage and chose to go into forbearance. I did read an article probably yesterday, and then I saw the same article again this morning, that if you've gone into forbearance, you cannot qualify for another mortgage for at least a year or refinance or anything like that. Have you seen that article?
I did not see the article. I know that I've heard there's a lot of, there was some talk about it. I've heard a couple people mention it. I have not read the article myself.
Yeah. I would just like to caution anyone who maybe is in that position where the money's running out and they're thinking that forbearance may be a savior, to really do your research on that before you make that decision. Because if moving or refinancing in the next year is something that you were thinking about, you may really want to do some research to make sure that that's not going to affect you. And I mean, that can always change. They can always make decisions and make that go away. But as of right now, they're saying for a full year, you are kind of stuck.
Yeah.
All right. So let's talk about some good news. Why is now a good time to buy?
Just because of what we looked at, which kind of alluded to already, is the, for a seller, now's a good time because inventory is so low. There's not a lot of inventory out there. So if you're thinking about selling, now's a great time to get your house out there and get it on the market. For the buyer side, again, interest rates are really at all-time lows still. So, I have some clients that typically have a budget that, they don't want their mortgage payment to be more than, $1,000. And typically we would have to put them in like a 30-year product to get them under their budget. And now because rates are so low, we're putting people into 20 and 15 years. So it's a great savings for clients. So when it comes to buyers, now interest rates are at the lows. So now's a great time to invest.
Yeah. And I sent you last week, I was listening to a podcast with Lawrence Yun, who is a chief economic person for the National Association of Realtors, probably one of the smartest men on the face of the planet. And my eyes were really opened when he made the comment that we printed all of that stimulus money. I did not realize that we just printed money to send out to everyone. All of those $1,200 that everyone got, we just printed money. And he's saying that in several years, that money is going to show up back in our economy, and that we're probably looking at some inflation. So if you're thinking about buying, now's a great time while those rates are still low, because in several years we could be looking at different rates entirely. And again, I'm not as smart as Lawrence Yun, but if Lawrence Yun says it.
No, I that was a great podcast, and I really appreciated you sharing that with me. Because when it comes to in those times of inflation too, is having that mortgage, you're heading off that inflation before it starts. So definitely now's a good time to get out there and get that house.
Yeah, definitely. And even though we have a shortage of listings, there's still houses. So, and not every situation is multiple offer, because some people just have no desire to get into a multiple offer situation, and not every situation is going to be that. So we're always happy to get people out there looking at homes. All right. So, I've got a new buyer. They want to get pre-approved. They're totally stressed out about the process because they don't understand what's going to happen. So how does that process work when someone calls?
Okay, so let me just kind of clarify the difference. There's two different terminologies out there, pre-approval and pre-qualification. A pre-qualification I can do for a client probably within 10, 15 minutes. Tell me what your income is, tell me what your debts are, What are you looking to buy? And I'll tell you if you qualify. We're not really verifying any information. I'm not verifying income. I don't know if you have the deposit accounts. I don't know if you have cash to go to closing. But that's something that I can kind of run numbers and say, based on what you're telling me, here's what you can qualify for. What we do at Marsbank is what we call true pre-approval. So we do an application, and I can do it over the phone. An application takes about 15, 20 minutes to complete. It's all information about the buyer. I mean, it's your numbers, your social security, your birth date, your income, all of your information. So it's pretty quick to get through. We will verify your deposit accounts. We verify your credit, and then we also verify your income. So when you get a pre-approval letter, the very first sentence in that pre-approval letter is, we have reviewed your financials and you've been approved. And that does a couple things. That actually allows a buyer to be confident in the fact that they've already been underwritten. They already know that their income, they can afford what they're looking for. It allows you as an agent that you're taking your client into a house that they can legitimately make an offer on. The worst thing to do is to go out there and show a customer a $500,000 house, and they can only afford a $200,000 house. They've already fallen in love with it, and now they can't afford it. So, it gives a lot of confidence to the buyer and to the agent that what you're showing them, and then also having the pre-approval letter is, hey, Lisa, I love this house. I want to make an offer. Here's my letter. Boom, it's done. We don't have to wait for that. So I tell people now's a good time. I did about 3 or 4 pre-approvals yesterday and have a couple more today that I'm going to get in. So now's the time to do that. Our letters will stay out there probably. We hold the letter out there for about 60 days. So it gives you some time to look. It's not like you have to do it right away and it's going to expire. You've got about 60 days, and we can usually do about a 30-day extension. But you definitely want to make sure that it's being reviewed, that your income is being reviewed, and that your deposit accounts, I've got clients that, they can afford a $300,000 house, but they don't have the cash to buy that. So we want to make sure that they're fully underwritten, and that what they have is they're confident when they go in to make that offer.
Good. Yeah, as an agent, there is a huge difference between a pre-approval and a pre-qualification, and it makes your offer so much stronger if you are in a multiple offer situation, or even in a regular situation, to say to the agent, these people have gone through the whole process, not just, a couple of questions and we really don't know if it's true or not. So there's a huge difference between the two. All right. Anything else that you would like to add, Shelley?
No, I don't. I would just say that right now with the whole rate environment, a lot of the things that I get from clients too is like, how long is this process going to take? Not just the pre-approval process, but overall. We typically do rate locks for 60 days. We're now kind of writing 75-day rate locks, only because I can work remotely. I'm used to working remotely. I can work from home. I work in my car, wherever I need to be. As long as I have a laptop, I can work. What we're seeing is a lot of back office processors, underwriters are all been working from home. Even, when counties are going yellow, the banks are still kind of monitoring how many people are in the office at a time. So it does kind of slow the process down. We're still moving along. We're still, lending money. Lenders want to lend money. That's our job. We're still out there lending. But I just ask people, just be patient with your lender because, it does take a little bit longer with everybody working remotely, but, we're getting things done. Appraisals have come back up. We did some drive-bys there for a while. And that worked for some clients, but now that we're opening back up and going yellow, appraisers are allowed to now go and do full appraisals of a house, walk through a house. Title insurance companies have gotten very creative to make sure that they're following all CDC guidelines. But so we're moving along. I just, again, just kind of be patient. We'll get you to the finish line for sure. So.
Yeah, definitely. And the one thing that I could interject is for people that want to look at houses now, if you're a buyer going to look at a house, agents are asking for pre-approval letters before you even look at the home, because they want to make sure they're going to let someone into someone else's home, that they're pre-qualified buyers, not people that are just looky-loos out there and potentially spreading the COVID virus around. So now more than ever, it's important to get your ducks in a row before you go shopping. And then for the people that have already that got pre-qualified before COVID, I think that that you should have a conversation with your lender, just to make sure that you're still good to go. Because if you were in those lower credit scores or you had that higher debt, you may not qualify anymore. So I'm going to make sure that everybody is actually ready to go when they are out there looking at houses. Because even though counties are going yellow, we still have a standard where we're not supposed to be in houses if we don't have to be. So unqualified people should not be looking at houses. It's not the time to go look at houses because we don't have anything to do. So hopefully this all passes and we get back to normal life. I'm probably the most ready to get back to see some people. Zoom has been very helpful, but I'd love to be face to face instead of computer screen to computer screen.
Yeah, I'm one of the few probably lenders that I love to go to my closings. So to me, that's like the happy time. My client house, the real estate agents, everyone's happy at the closing table. So it's been really tough for me not to be able to go to the closing table with my clients. You know, I'm like, well, call me on the phone when it's over.
Yeah.
You know, as soon as it's the next day, I'm calling, I'm like, hey, everything go okay? I didn't get any phone calls, you know, but yeah, I miss that one-on-one as well with clients during this time. But, you know, again, we're out there to do what's safe for clients until we get back to a new normal. So
yeah, we can't, as real estate agents, we can't attend closings either. So that's a huge change for us. It's, you know, stressful. We're like sending our clients off and saying, okay, the settlement company is going to take great care of you. Let me know when you're done. That is just not normal. I mean, we're
like sending your kid out of the playground and like not being able to be there to watch them. It's like, what?
Yeah. So it's definitely been interesting to watch all of this unfold, and never in my life did I think that we would ever see anything like this. But fortunately, I've known one couple that have gotten sick, but they've recovered. So yeah, I'm very lucky that not many people that I know have been affected. All right, so again, I'm Lisa Lathom, team leader with the Lisa Lathom team, brokered by eXp Realty. Shelley Hysong with Mars Bank. Shelley, when I post this video, I'll make sure I put your contact information, but if you wanted to just give everyone your contact information right now.
Sure. My cell phone number is usually the best way to reach me, and that's at 724-591-0092. You can also visit my website. It's at www.marsbank.com/shysong, and that'll take you right to my webpage. So, you know, it's a great way to contact me. Email is going to be shysong@marsbank.com, and it's MARSBANK.
Okay. And Shelley has the cutest tagline for our networking group. So go ahead and tell everyone.
Shelley Hysong with Mars Bank, and I offer your clients service out of this world.
Yeah, I love it. I love that tagline. And then one other thing, Shelley, I know that you guys aren't doing them right now, but for people that aren't going to buy this year, maybe they're looking at next year, Mars Bank offers first-time homebuyer seminars. So I assume that when life gets a little more normal again, you guys will pick up with those. So if you wanted to tell everybody about those and the incentive.
Yeah. So, and actually, I actually had a first-time home buyer that closed during the whole COVID thing. And what I actually did, we didn't have the regular seminars. Obviously, they got canceled. But I did a one-on-one. So I sent a presentation in advance, went through the whole seminar with the client, and we were able to, at the finish of that, we give a certificate for $500 off your closing costs. One of the things that Mars Bank is actually in the process of doing is we are going to put some short videos that we had as part of that presentation. We're going to put them on our website. and clients can actually click on them. If they view them, they will also be able to get a certificate. So we're going to continue the first-time homebuyers even during this time, as well as the first-time homebuyer grant programs. We offer the first front door, which is a 3-to-1 match with the Federal Home Loan Bank, as well as Beaver County Housing Opportunities has a first-time homebuyer grant. I just had a client that I just got him pre-approved, and we got him approved for both the Beaver County grant and the Housing Opportunities grant. So he's got about $8,000 in grant money coming to him.
That's awesome.
So as things get lifted and he can find a house, he'll have that assistance ready for him as well. Those programs are still out there. So again, if you're working with a lender that may have had a program, again, just reach back out and make sure that's still an ongoing thing. So
that's fantastic. And I know that we're a little over time, but I just actually was having a conversation with a friend this morning about grant money. And she said to me, what's grant money? So I thought, oh, that's interesting. Because I thought everybody, in this business, we kind of take for granted that everybody knows what we're talking about. So do you want to explain what grant money is?
Yeah. So grant money is money that you as a borrower can get towards your down payment and closing costs. And this money usually comes from some type of government agency. As I mentioned, Housing Opportunities of Beaver County has a grant program. The First Front Door, which is through the Federal Home Loan Bank, has, and what they do, it's actually free money to the buyer. There are stipulations to those. A lot of times, you have to live in a house at least 5 years. And as long as you're there 5 years, then the grant is forgiven. Most of those programs are also based on household income. So they'll look at, as an example, I'm buying a house, but I have a mother that is elderly and living with me. And even though she might not be on my mortgage, she's living in my house. So they will take in consideration everybody's income. And then there are guidelines as to the number of people in the house, whether you qualify under that. And it's usually 80% median income. So they look at, if there's 4 people living in the house, where's 80% median income? If you're below that, then you can potentially qualify for the grant program.
Okay, good. And I think a lot of people don't realize that's out there. Free money is nice.
Yeah, and a lot of the programs, like I said, the First Front Door and Beaver County Housing Opportunities, Beaver County Housing Opportunities actually does a great job because they're willing to take a third lien position. And then again, once they live there at least 5 years, that money is forgiven. You don't have to pay it back. And so we can piggyback on some of them, so that's great that, just because you're getting money from one, you can't get money from the other. And that's not how it works. So
that's fantastic.
You can get additional cash. So
that's fantastic. And because not a lot of lenders are willing to work with grant money because it's a lot of work for you as a lender. So
it is. And but you know what, to me, I don't like to leave any money on the table. And, if the county has X amount of dollars to give away, I'm going to find clients to find that.
Yeah, that's fantastic.
We don't want to leave any money on the table. It's there for a purpose. And, we want to make sure that we get those clients into those homes. So
yeah, that's fantastic. All right, Shelley. Well, thanks so much. I think this was really, really helpful. It will be very helpful to a lot of people. You're a wealth of knowledge. A lot of times people ask me questions about lending and I start to sweat because I say, I am not a numbers person. There's someone else you need to speak to about numbers because I need a calculator to do math. And lending laws change all of the time. Something that, applied last week doesn't apply this week. So, you guys have a very hard job trying to keep track of all of the rules. So,
well, I thank you. Thanks for inviting me. I get the same thing with, clients. They have questions about their residential sales agreement. I'm like, look, this thing's like 12 pages long. I'm like, I work with a 4-page application about my borrower. So, that's where your expertise comes into a lot of play with clients. So.
Yeah. In real estate, I don't think that people realize how many people are involved in a transaction and how so many people have unique jobs. And I mean, just like the title company, they do a whole lot of stuff that I have no idea about. And I'm constantly calling and asking questions, and I learn a lot. Just like with lending, I learn a ton every time I talk to a lender, but everyone has a unique job. There is a place for everyone. And I'm so grateful to have a great team to help when we need something.
Well, that's, and, you know, and I laughed, we used to, in our first time homebuyer seminar, we talk about that, and we tell our clients, look, it's team you know, your real estate agent, your lender, we're all there together. Like we build a team, and we need to work together so that we can get to the end product. So
yeah. Very important to have a good team.
Yeah.
All right. Well, thanks again, Shelley. I'll put your information
Well,
on the video. I appreciate it. And if anybody has any lender needs, please reach out to Shelley, because she's one of the best. All right.
Thanks, Lisa.
All right. I'll talk
Thanks.
to you later.
All right. Bye.
Bye. I got to figure out how to stop recording, so don't make fun of me.